This is Matthew Kratter from Trade University, and today I want to talk about FTX, the Grayscale Bitcoin Trust, GBTC, and paper Bitcoin. And I think it's important to keep reminding people in the space who don't understand the difference between Bitcoin and crypto, how SBF and FTX were unquestionably enemies of Bitcoin. I've shared this headline before where Sam Bankman-Fried, SBF, said that Bitcoin has no future as a payments network. This is not going to reflect very well on him in the future. Now, what's happening with FTX and SBF and BlockFi blowing up and Gemini Earn freezing withdrawals, what's happening is a necessary cleansing of the space. FTX going under is a good thing because people are finally realizing that it's all about Bitcoin, not crypto, that really matters. And the blowups at FTX, BlockFi, and Gemini Earn are making people finally take Bitcoin self-custody seriously. Bitcoiners have been talking about this for years, and our words have been mostly falling on deaf ears until now. People have been more focused on their monkey JPEGs than they have on the hardest asset in the world, the hardest digital asset, and taking self-custody of it. Now, self-custody means holding your Bitcoin not on an exchange or an app, but in a software wallet, and preferably a hardware wallet, which is cold storage, that holds the private keys for you. But it's even better than that, what's been happening. So I want to talk about in this video the concept of paper Bitcoin, which is just a paper, means a Bitcoin IOU or not real Bitcoin. The FTX blowup is actually destroying paper Bitcoin and paper Bitcoiners, people who are willing to hold paper Bitcoin, Bitcoin IOUs instead of the real thing. If you take a look at the balance sheet from FTX right before it went under, or what they've disclosed in bankruptcy proceedings, there are no Bitcoin assets on the balance sheet, but they do have Bitcoin liabilities of $1.4 billion worth. So what does this mean? What are Bitcoin liabilities? It's basically Bitcoin that's owned by FTX customers that they have not yet withdrawn. So these are Bitcoin liabilities because FTX owes them to its customers. If you are holding any Bitcoin on FTX, it's very clear now that that neither you nor FTX had any real Bitcoin. You were not able to withdraw it. It wasn't yours. You didn't hold the private key. And as it turns out, even FTX did not have any real Bitcoin on the asset side of their balance sheet. They just had this huge liability on the liability side. FTX is gone, and so is your fake Bitcoin. So this is the cleansing process. It's very painful. I feel very badly for individuals that this has happened to, especially those who weren't aware that something like this could happen. But this is the ultimate process of the destruction of paper Bitcoin and the destruction of paper Bitcoiners. I can't even imagine actually calling oneself a crypto exchange and having zero real Bitcoin on hand. It actually boggles the mind if you think about it. But Sam Bankman-Fried was someone who he wasn't a real Bitcoiner. He didn't come up in the space as a Bitcoiner like many of the other exchange founders. Instead, he came up as this child of an elite family, and he was being pushed by various special interest groups. If you're finding this video helpful so far, I just ask you to hit that subscribe button. So let's have some fun now with the remaining exchanges. Can we cause a few more of the dishonest ones to blow up by pulling our Bitcoin off the exchanges? Obviously, I don't still have any Bitcoin on the exchanges, but if you do, this can help to cleanse the space. Pull your Bitcoin off the exchanges, request a withdrawal, force the exchanges to have real Bitcoin on hand and not be able to get away with paper Bitcoin like FTX did. If they don't have real Bitcoin to give you when you request a withdrawal, let them blow up and thus destroy their paper Bitcoin holdings. Then other exchanges will take notice, and they'll also make sure that they always have fully reserved real Bitcoin on hand to give to customers on a moment's notice. So in this way, we can help to try to destroy the bad actors and also get our Bitcoin into cold storage safely. Problem with paper Bitcoin, I've talked about this in a number of videos, is that in a sense it artificially raises the supply of Bitcoin beyond 21 million. This creates downward pressure on Bitcoin's price in the same way that paper gold has been used for the past 40 years to suppress the price of gold. Now, ultimately, paper Bitcoin will be destroyed in the ultimate short squeeze, and I do have a video about that I'll link to in the description notes below. But in the meantime, it does create at least short-term price suppression. One good thing about this is it allows you and me to pick up Bitcoin at below fair value prices, and then as the paper Bitcoin is destroyed, we have the potential to see very, very large melt-ups. And especially now, people are beginning to realize the difference between a Bitcoin IOU and Bitcoin the real thing. Now, unlike gold, Bitcoin is very easy to custody and store. You don't need to store it at the bank vault. You don't need a home vault. You just need 12 words, which is your backup or recovery seed. You don't need giant vaults. You don't need brink trucks to move it around. And again, we're talking about you could store a few gold coins at home, but let's say you have $1 million worth of gold or $10 million worth of gold or something like this. Gold very rapidly becomes difficult to use at that scale. When paper Bitcoin is destroyed, as it was in the FTX blow up, because basically it's now been revealed there are no Bitcoin assets there are only liabilities, and those liabilities will enter into the bankruptcy process and will almost certainly not be paid off. When paper Bitcoin is destroyed, it should, all else being equal, exert upwards pressure on the price of real Bitcoin. Now, a lot of people are talking about more regulation. This is probably what we're going to get, but I would suggest that it's not the ultimate solution. It's not the best solution. And even when you have regulation, Bernie Madoff's fund was regulated, Enron, WorldCom, all of these scammy companies were regulated. Theranos was regulated as well. In fact, the whole US banking system was highly regulated, and yet it still blew up in the 2008 great financial crisis, leaving the FOMC chair, Ben Bernanke, quite surprised when he was saying, after having said that the subprime crisis was contained. So you have these regulators and these bankers who don't even know what's going on. It's much better, rather than having regulation, allowing people to verify things for themselves. Don't trust the regulators or the banks or the crypto exchanges. It's much better, and this was one of Satoshi's gifts to us, it's much better to be able to prove cryptographically that you or someone owns Bitcoin rather than having regulation. And I made a video about this, about how if you own Bitcoin at a certain address, you can sign a message associated with that address and prove that you control the private keys and thus prove that you control the Bitcoin. This is the ultimate form of industry self-regulation, where people can demonstrate that they own Bitcoin. Again, you don't want to share how much Bitcoin you own with everyone else, but if you are a large institution like a Grayscale or a Coinbase or an FTX, this sort of proof of reserves, I think, should become much more common. Now we have the issue of GBTC, the Grayscale Bitcoin Trust. For some reason, the management does not want to sign a transaction on the Bitcoin blockchain to prove ownership of real Bitcoin behind GBTC. This could mean a couple of things, and none of them are good. Either GBTC is not fully backed one-to-one by the amount of Bitcoin, by real Bitcoin that it says it is, or Grayscale is trying to hide something else, and we're not really sure what that is, perhaps the source of the coins or something like that. But this is really the complete opposite of the Bitcoin ethos. We have Grayscale in a tweet thread, which I'm going to share shortly, saying, just trust us, bro. You don't need to verify. We can see here this tweet thread from yesterday from Grayscale, from Friday, talking about how they basically store the Bitcoin that backs GBTC. They store it at Coinbase custody, at the Coinbase Custody Trust Company. And then they say, Coinbase frequently performs on-chain validation. Due to security concerns, we do not make such on-chain wallet information and confirmation information publicly available through a cryptographic proof of reserve. Now, this is a huge, huge red flag, in my opinion, especially when there's so many bad things going on in the space and people are really trying to figure out who they can trust and who they cannot. It's very strange to me that Grayscale would not want to sign a transaction or otherwise cryptographically prove that they're fully backed, that GBTC is fully backed by real Bitcoin. This is one reason I've always recommended against GBTC. It's just a Bitcoin IOU ultimately that may or may not be backed by real Bitcoin. And if they're not going to cooperate, there's no way we can know. We have to trust them. Here's an old video that's actually a who's who of bad places to hold Bitcoin. I called it Bitcoin IOUs. This is a video from a year ago in which I discussed BlockFi, Robinhood, GBTC, and PayPal, none of which are very good places to hold your Bitcoin. Since I made that video, the premium or the discount of GBTC, of the trust, has expanded. The discount has expanded to 52%. So it's a negative premium or a discount. What this basically means is if you buy GBTC right now, you are buying Bitcoin at 52% off. So it's really worth something like $10,000 per Bitcoin. You're buying Bitcoin at $10,000 per Bitcoin. Again, the problem is you have to trust that GBTC actually has the Bitcoin. It's very common for closed-end trusts like this to trade at a discount to NAV. And we've talked about this before, 10, 20, 30, even 40% discount. When you start getting into discounts like this, this suggests that there is some sort of financial distress or solvency issue, either at a parent company, either at Digital Currency Group, DCG, which is Barry Silbert's company that owns Grayscale. There's either a problem at the parent level or there's a problem at the Grayscale level to see this sort of discount to NAV. So I don't recommend, this is very tempting to try to buy Bitcoin at a discount here. It's not something I recommend. I think it's a little bit like rolling dice. You might get lucky and you might not. But I think it's very, very strange that Grayscale is refusing to provide cryptographic proof that they own Bitcoin. This is, like I said, the complete opposite of how a Bitcoin company should function. But the problem, of course, is Digital Currency Group is not a Bitcoin-only company. They've expanded their tentacles into crypto land and DeFi land as well. Another problem with GBTC, they charge you a 2% annual management fee, which we've spoken about in previous videos, which really adds insult to injury. You think about it, if you hold this for 50 years, it's essentially like you're paying out 100% in management fees. The math doesn't work exactly like that, but that's a rough approximation. Is GBTC going to blow up or fail? At this point, I now have to assume that the worst could happen, since they're refusing to provide proof of reserves, as we said, at a time of crisis like this. And there are a lot of rumors online, if you look at Twitter, that the parent company, that DCG, is out there trying to raise emergency capital at the same time. Maybe they need to raise it in order to go buy some Bitcoin to back GBTC or to otherwise support the price of it. Now, as the world is discovering, especially with the blow up of FTX, Bitcoin exchanges tend to be much less risky. So it's one thing to want to store your Bitcoin on any exchange, but it's even worse if you store it on an exchange like FTX, which was basically held up and propped up by their exchange token, FTT. And once FTT unwound, after CZ pushed on it a little bit, it took down the entire company. If this were a Bitcoin-only company, this would never have happened, especially if you were a Bitcoin company that actually had some Bitcoin on the balance sheet instead of just Bitcoin liabilities. So being a Bitcoin-only crypto exchange or Bitcoin-only exchange is a good business decision, as we are finding out now. When you go to buy your Bitcoin next time, if you want to buy KYC Bitcoin, I would definitely suggest taking a look at Swan Bitcoin, River. These are all Bitcoin-only companies, and Strike. And again, I've used some of these companies in the past. I'm not being compensated by them at all. I'm not affiliated with them at all. If you want to learn how to buy Bitcoin on Strike and withdraw it to a Trezor hardware wallet, I made this do-it-yourself how-to video about a year ago. And I show you how to buy it on Strike, buy Bitcoin on Strike, and then withdraw it into cold storage using a Trezor hardware wallet. So I'd encourage you to check that out. I'll click that and put that in the description notes below. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.